Well, let's get to a bit more analysis with Fiona Cincotta, who's an analyst at City Index. Welcome back to the programme, Fiona. Good to see you. So, markets going to be pretty happy about this deal between the US and China. What do you think the key takeaways are for investors? Were there any big surprises?
You know, I think it's just the broad understanding that there has been a de-escalation, a quite considerable de-escalation between the US and China. It does feel that they are much more moving towards being on the same page, and that has brought a lot of optimism to the market because, you know, we only need to think back to when we had China and the US ramping up tariffs against each other, the impact that that was having on risk sentiment and the mood in the market was very strong. So we're actually seeing the reverse of that, and that's been good news. I think as far as surprises is that potentially it's quite few, the details are few and far between. So I think, you know, this is very much broad framework. It's not the details of a strong trade agreement. I mean, that would be rather too optimistic right now, I think.
And are there any potential risks, you think, unresolved issues in the agreement that really could reignite future tensions?
You know, I think relations between China and the US are fragile. They are easily reignited. That we've already had Trump once accusing China, and then China accusing the US actually of not adhering to the initial agreement in Geneva. So, I mean, potentially, I think that there could be some bumps in the road ahead. But it definitely does feel like it's a move in the right direction. So that's not to say it's going to be plain sailing from here on in, but it does feel like the US and China are managing to agree, at least broadly, on a few points which are putting them in the right direction, which is keeping the market mood much more buoyant than it was back in April, for example.
Well, absolutely. And talking about buoyant moods on the market, Fiona, the S&P 500 hitting a record high this week. Zooming out, what's driving that surge?
Yes, so we've seen some record levels in the US. I mean, we saw the S&P 500 at record levels. We also saw the tech-heavy NASDAQ 100 is also at record highs. A couple of factors here. I think not only have we got this sort of optimism that worst-case scenario with US and trade tariffs may have been avoided, although we've still got the July 9th deadline to come, but it does feel like the mood music has changed quite considerably and that there are deals being done. That's helped the mood considerably. Also, I think, you know, we've heard from Federal Reserve Chair Jerome Powell testify before Congress a couple of times this week, and he was sounding a little bit less hawkish, potentially moving a little bit more towards the possibility of rate cuts coming sooner than he had the previous week in the Federal Reserve meeting. So that optimism surrounding the potential for more interest rate cuts from the Federal Reserve is also boosting the mood. And then also, obviously, the ceasefire in the Middle East, that's holding up. Oil prices have come down, and it all seems to be happening at the same time, which is giving sentiment the boost it needed.
And what other fresh economic data are you looking at, Fiona?
Well, today we had the release of core PCE. Now, that's the Federal Reserve's preferred gauge for inflation. Now, we know the Fed have been watching inflation very closely because of those concerns that Trump's trade tariffs could actually add inflationary pressure to the US economy. Now, interestingly, the inflation data did show that inflation ticked up, but only very slightly, not enough to cause any concerns. It came in 0.2% month on month. 2.7% year on year, just up from 2.6%. But that data also showed that personal spending had fallen, so it fell by 0.1%. Now that comes as consumer confidence has deteriorated in the US, and that is all coming on the back of these erratic policies that we have seen from Trump. So there are sort of effects that are happening in the economy because of it.
Fiona, as ever, great to have you with us. Thank you so much. Fiona Cincotta from City Index.